Defi, the ultimate beginner's guide to decentralized finance. Since the public went crazy for blockchain technology, the term blockchain has been thrown around a lot. So much so that it might need to be clarified to some people. In short, a blockchain is like an immutable ledger of records. It's a database that is shared across multiple participants in a network. When new records are added to a blockchain, all the participants must agree or approve them to be added to the database. The blockchain is, therefore, decentralized, as no single party controls it. It is also transparent, as anyone can view all transactions once they are on the blockchain. The most popular application of blockchain technology is cryptocurrency. However, there are more ways than just that to utilize this revolutionary technology. A decentralized network allows different participants to work together without a central authority. It also provides cryptographic protection through cryptography. In this article, we'll learn about blockchain, its many applications, and what makes it special. It is reasonable to assert that DeFi was one of the most popular buzzwords in 2020 and 2021, particularly in cryptocurrency. At one point in time, DeFi tokens had the best performance of any digital asset, with several users enjoying enormous returns. However, cryptocurrency traders and regular people alike still need help grasping what the DeFi protocol is all about. The term decentralized finance, or DeFi, refers to a type of financial service that operates independently from centralized authority and makes use of cryptocurrencies to establish exchanges, lending services, insurance services, and other types of financial services. Like cryptocurrencies, decentralized finance eliminates the requirement for a central administrator or authority. However, even experienced traders need help comprehending how it operates. Continue reading to learn how DeFi operates, and let's decode the truth about whether or not you can make money using DeFi. DeFi, decentralized finance. Decentralization is the idea of taking services that were traditionally controlled by a major party and moving them to a distributed network. It involves working together without the need for an intermediary or third party. Without traditional intermediaries, transactions, contracts, and even decision-making can be made directly between the parties involved. This new way of thinking is known as decentralized because it involves network participants, traders, service providers, etc., who are working together without having any single authority over them. This can be achieved through encryption, cryptography, and blockchain technology. The goal is to make parties trust each other through cryptographic verification to achieve a consensus instead of relying on a central authority to work out the details. When blockchain technology is applied to financial services, securities, and lending institutions are removed from the equation. Think of it as a decentralized ledger that records all transactions between parties in a blockchain that everyone can see. In a decentralized network, no single party has control over the ledger. Rather, they all do. Blockchains can boost efficiency and transparency in existing financial services. It also makes it very difficult for bad actors to commit fraud or manipulate transactions because blockchain technology provides inherent security. Centralized finance, CeFi, also known as the traditional economic model, is a financial ecosystem that includes all legal and fiscal operations, such as banking, loans, interest rates, derivative products, trading, financial planning, and asset ownership. CeFi is also sometimes abbreviated as traditional finance. These financial instruments all share a single point of convergence at their core. This radial point is typically a bank, a governmental organization, a firm, or a third-party body that asserts full custody and jurisdiction over the operations. Alternatively, it may be a central authority figure. These centralized financial organizations serve as an intermediary in every economic transaction that may take place, including the buying and selling of assets, the taking out of loans, and the giving of loans. They have maintained their dominance over the financial system for centuries, during which time they have dictated transaction times and costs, interest rates, asset dealing, and ownership commissions. It ought to be simpler today to understand what is meant by the term decentralized finance. The term decentralized finance, or DeFi for short, refers to an ecosystem for the financial sector constructed on blockchain networks. It is compatible with centralized finance's financial instruments and business operations types. However, in contrast to the conventional paradigm, this one does not require a centralized authority that would demand a portion of the proceeds of each transaction or exchange that takes place on its platform. In layperson's terms, DeFi is the place to go if you want to exchange assets and lend or borrow money, all within the confines of the law and without interference from the banks or the government in your business dealings. A blockchain-based network that allows users to engage in peer-to-peer, P2P, asset transferring, trading, or lending, among many other financial processes, is known as a DeFi protocol. DeFi developed this type of network. Thanks to the deployment of immutable smart contracts on the blockchain, participants can use their cryptocurrency holdings in trustless payment transactions and trustless borrowing and lending. The financial world is viewed very differently as a result of the paradigm change brought forth by DeFi. It extends an already decentralized, open-source, permissionless, and transparent technology and incorporates the most significant breakthroughs of our time, cryptocurrency and blockchain. The term decentralized finance is now used to describe the rapidly growing financial world order. It refers to an ecosystem built upon cryptographic tokens, a blockchain, and smart contracts. This network is centralized on decentralization and has no central authority holding jurisdiction over it. Benefits of decentralized finance. Before getting into the how of decentralized finance, let's look at how it can benefit investors and banks alike. Friction-free cross-border trading with no fees. The global economy is projected to exceed $85 trillion by 2025. This is a big reason why DeFi protocols can be so powerful. Under the conventional financial model, securing international payments and cross-border trading arrangements can be extremely cumbersome and expensive. Ease of use. dApps enable users to trustlessly exchange assets like one could with a fraction of a Bitcoin. dApps are easily integrated into existing financial services, enabling users to seamlessly switch from centralized to decentralized financial services without extra effort. Completely trustless. DeFi protocols have no central authority or trusted company keeping track of every transaction or exchange performed on the network. Thus, users can rest comfortably knowing that their interests will be preserved. No one can reverse transactions or block them. Eliminates transaction risk. All transactions on DeFi protocols are compulsory. Users must exchange assets on the network and cannot pull out or cancel their transactions mid-process. Therefore, malicious activities such as double spending have no place in this ecosystem. Immutability. All transactions on a DeFi protocol are written forever in the blockchain, meaning no one can edit or reverse them. The blockchain is decentralized and distributed over thousands of computers globally. The network would automatically reject its alterations if anyone attempted to tamper with it. Cost-saving benefits for everyone involved. Decentralized finance also gives the financial sector much-needed cost-saving advantages that should improve its overall appeal and adoption levels. A decentralized global financial ecosystem. By utilizing the same technologies that have brought us cryptocurrencies and blockchains into the mainstream, we have developed a global financial ecosystem that operates on DeFi protocols. This enables customers to use dApps in their day-to-day financial transactions. We call this a DeFi platform. The DeFi platform enables users to send money and buy and sell assets in one place without requiring them to undergo complicated identity verification processes or provide third parties with their personal information. Interoperability. All participants of the DeFi network can interact with one another seamlessly through smart contracts. This means that all participants have a single source of truth, making it possible to settle transactions without needing an intermediary. Transparency. DeFi protocols are completely transparent. All transactions are permanently recorded on a blockchain, which makes them open for public scrutiny. DeFi protocols can also be programmed to be entirely transparent and publish all financial activities in real time. Self-custody. Investors are advised that they should always be the custodians of their assets. These assets should never be stored on any third-party exchange or platform. Instead, they should be stored in a hardware wallet such as Trezor or Ledger. Users can also use paper wallets for storing their digital assets. Permissionless. DeFi protocols are open, transparent, and permissionless. Anybody can join the ecosystem and participate in its activities. All participants use a DeFi protocol to send or receive fiat funds. Thus, they do not have to connect with third-party financial institutions like banks or brokers, which is why they are called decentralized. How decentralized finance works? DeFi protocols easily integrate into existing banks and financial service providers to enable the seamless use of cryptocurrencies in various online and offline payment transactions. Some of the most commonly used DeFi protocols are MakerDAO, DAI, Amos.geo, and 0x. A DeFi protocol allows users to utilize their cryptocurrency assets as collateral to acquire tokens for other assets. Unlike centralized financial services, the network does not rely on a bank or broker to provide the loan amount in a conventional fiat currency. A smart contract instead provides the loan amount to borrowers directly from an escrow account on the blockchain. Through smart contract technology, members of a decentralized financial system can conduct real-world banking activities with one another. Because they carry out their terms automatically and do not require human oversight, the terms of smart contracts simplify and expedite the completion of a wide variety of transactions, including payments, loans, and derivatives. At the moment, there are about 550 DeFi initiatives that are active in some capacity inside the cryptocurrency business. At least 500 digital assets can be accessed through the many different protocols, many of which contain their native tokens. Most of these DeFi projects were initially implemented on the blockchain for Ethereum, which is still operational as of this day. Nevertheless, many of them have developed into cross-chain solutions, including Band Protocol and Cosmos. The Lightning Network is another one of Bitcoin's applications, and it is the one that comes the closest to decentralized finance than any others. Because most DeFi protocols are implemented on Ethereum, all projects must use Ether as a medium of exchange. In addition, most of them employ Solidity, the programming language for the blockchain, which is an approachable variant of JavaScript. As a result, most developers can only construct new applications by learning new programming technologies. DeFi use cases. Asset management. Asset management on a DeFi protocol is done using the DeFi protocol, which is similar to the use cases of other crypto assets. However, asset management involves buying, selling, and exchanging crypto assets in a decentralized way. The goal is to use these tokens as collateral for obtaining other loans. Rolling. Rolling enables users to borrow money by trading their crypto assets for other assets with lower value and pegged to a fiat currency such as USD. DAOs. DAOs are economic systems that function through software protocols and smart contracts. These protocols can manage a collection of funds by pooling those funds together or allocating specific portions to different people and project teams. Crowdlending. Crowdlending is an investment practice whereby businesses apply for financial loans from an aggregate of individuals instead of from banks or other financial institutions. Here, community members, locals, lend money to local businesses on a small scale. Data and analytics tools. Data and analytics tools are used to organize data, such as market data and monitoring, to improve the efficiency of a company's operation. Decentralized finance provides the financial services most established banks offer through cryptocurrency. Unlike completely centralized banks, DeFi protocols are decentralized, meaning no centralized entity has authority over any particular transaction. This means that users in a decentralized financial system have full control over their transactions and abide by the rules of smart contracts. Purpose of DeFi. The purpose of DeFi is to create a new financial system that will be run on the blockchain. As you can see, the protocol is completely decentralized and independent of banks, governments, and other financial institutions. Instead, it puts the power in people's hands to make transactions they choose and acquire loans against their digital assets. Any one individual or group does not control DeFi protocols. This means it does not have any centralized authority regarding transactions and lending. In addition, there is no need for a certain amount of financial institutions, nor is there an intermediary that needs to intervene. This would eliminate the requirement for banks, brokers, or clearinghouses to perform vital services for users to obtain loans. However, DeFi protocols require a consensus among all users regarding using their digital assets. Otherwise, they will function differently than intended. This is why membership in the community and following are important. Also, a key element of DeFi protocols is knowing how to set up a sound smart contract that allows members to access loans and other financial services easily. After gaining an understanding of what decentralized finance is, the next important thing for any person to think about is the function that it provides. It is acceptable to ponder why decentralized finance came into being. This question becomes quite unavoidable when people refer to decentralized finance as a phenomenon that cannot be stopped. As a result, a more in-depth examination of the beginnings of DeFi can shed light on what exactly DeFi is and why we require it. The conventional marketplace is characterized by a high degree of centralization due largely to the impact of centralized governmental structures. Therefore, the monetary system will be expected to operate through centralized entities such as banks. The concept of centralization refers to the management and regulation carried out by centralized entities, with complete control being vested in those entities. A single failure point contributes to the increased risk associated with a centralized strategy. It is necessary to concentrate on alternatives because there are many unanswered concerns regarding the capabilities of centralized bodies. Some of the questions that raise concerns about the viability of centralized financial systems over the long term include the timing of decisions by officials for printing more currencies, the impact of factors such as financial requirements or the need for consistency on such decisions, and so on. Blockchain security. As mentioned earlier, the blockchain is an immutable ledger. No user or organization can change or manipulate any records once they have been made available on the network. Therefore, it becomes key for DeFi projects to build smart contracts that are decentralized and fully autonomous from one another. This involves a concept called self-governance. Self-management is where you are in charge of your operations and decisions. DeFi has essentially decentralized management by building smart contracts that can be validated by code, using code as a mechanism to self-clarify rules, and naming and describing specific functions that are needed to populate the application. Blockchain projects must follow these steps to attain the proper level of security through such networks. Decentralized finance and the future. Some of the most exciting developments with decentralized finance will be introduced by the DeFi movement. This type of innovation is enabled by blockchain technology and is made possible through new protocols that have been established to replace traditional banking systems. The representation of these financial structures on the blockchain has already begun to create projects that improve efficiency and decentralization. As a result, DeFi is becoming a genre that can disrupt and change traditional banking, giving users freedom from banks, corporations, and governments. Blockchain projects are beginning to offer decentralized financial services for people who want a fully functional platform that does not rely on banks. This type of project is highly futuristic and exciting, and the power of blockchain technology will continue to be used to promote DeFi. Decentralized finance is an industry that has many moving parts and much to look forward to. It's important to keep things in perspective when trying to understand this industry because it is still very new and evolving rapidly. However, analysts are looking at the major characteristics of this industry that will determine if it continues to grow and thrive. Some traits are scalability and interoperability, or the ability to connect different platforms. Essentially, these two qualities are essential to providing a helpful, stable, relevant product. The future is bright, and DeFi has already begun to provide high-quality decentralized financial services for its customers by building on top of the increased scalability and interoperability elements. Another trait that will be important to DeFi development is the ability to perform functions in a decentralized way. This feature would enable users to manage funds, make financial transactions, and access loans without going through a third party. In addition, providing users with the ability to decide what they want their services to look like is another important quality needed. In the long run, DeFi projects will incorporate these factors or elements to provide their customers with the best possible service possible. Decentralized financial services are the future. Getting involved in this industry is the first step toward being a successful investor. The establishment of these services has already begun, but more exciting developments and changes are still on the horizon. Is decentralized finance, DeFi, safe? Those that delve into the cryptocurrency market do so at their peril, just as they would in any other emerging financial sector. Regrettably, it is just as easy to fritter away money in this emerging market as in more conventional forms of finance that a few large institutions dominate. Even more so, there isn't a rising market on the planet that doesn't occasionally get a visit from con artists, hackers, and other forms of online criminality. Because of this, you will first need to understand this subfield within the cryptocurrency sector before you can discriminate between legitimate businesses with the potential to generate profits and deceptive operations. A decentralized financial system is only as secure as its users make it. However, because you are a participant in this market, you have an increased responsibility to investigate and assess each potential financial enterprise. If you find yourself a victim of a scam, you won't be able to get help from a centralized authority because there isn't one. Therefore, performing all necessary research before opening your digital wallet is in your best interest. With that said, many potentially profitable projects are looking to disrupt the existing financial infrastructure and make peer-to-peer borrowing and lending possible through blockchain technology. Learn more about these projects and why they appeal to cryptocurrency investors below. Decentralized finance, DeFi, is a term used to describe platforms offering more diverse functions than centralized institutions like banks. Unlike traditional banks, these networks do not rely on a third party like a financial institution or corporation as a security agent. Instead, blockchain projects allow customers to have complete control over their investments and finances. DeFi platforms provide security, transparency, and liquidity that are not present when lending or borrowing money through traditional institutions. Conclusion: the decentralized finance industry is one of the most exciting emerging markets in the world. In addition, DeFi projects are making more and more impressive contributions to this industry by offering solutions to problems that traditional financial institutions could have caused. Blockchain technology has already changed many aspects of our society. Cryptocurrency and blockchain projects have taken note, and some of the most intriguing ideas come from these areas. Decentralized finance projects are among the most interesting and well-capitalized industries in the cryptocurrency sector today. If you're interested in investing in this industry, this guide is a good place to start. Decentralized finance projects offer new technology products that improve current financial systems by offering users more freedom, flexibility, and security. DeFi companies tend to offer their services through distributed ledger technology that utilizes blockchain technology as its basis of operation. The crypto community uses the term DeFi to describe all blockchain-based financial applications. These products include decentralized exchanges, stablecoins, security tokens, and other financial services that do not require a central authority to function properly. The benefits of these products include enhanced security, lower costs for users, increased data privacy and freedom, better financial management services. In this guide, we will go over the current DeFi projects available on the market and show why they are popular. We will discuss their main features and goals and how they will impact blockchain-based finance in the future. We will also provide investment advice to help you decide which ones to give a shot when investing in cryptocurrencies during your next purchase.